Welcome back to Investing Talk Podcast. Today we're looking at a really interesting one, a company that's been lighting up screens, Bitmine Immersion Technologies, BMNR. It's had this, well, frankly, incredible run this year, up something like 700% year to date, which naturally gets everyone asking, after a surge like that, is now actually a good time to jump in, or is it too late? We're going to try and unpack that, look at the arguments on both sides. It's pretty charged. But first, hey, if you find this useful, please do take a second to subscribe, maybe hit that like button, leave a comment. It really helps us out. And yeah, definitely if there's a specific company you want us to analyze, drop it in the comments below. We do read those.
Absolutely. And our goal today is, well, pretty straightforward. We need to cut through all the noise surrounding this one. There are two really conflicting stories here. You've got the bull case, right?
Yeah.
Driven by this massive crypto accumulation, specifically Ethereum. But then you have the other side, the sort of fundamental reality of their actual business, what they do. So we're going to try and connect those dots for you so you can get a clearer picture of the risk versus reward here.
Okay, let's dive into that bull case then. Momentum, the Ethereum strategy. What's really powered this, say, over the last 3 months, August to October this year? Because it feels like it's not just about their mining tech anymore.
No, not at all. It's fundamentally shifted. What's really fascinating is how quickly they pivoted, or rather doubled down on this Ethereum treasury expansion. Their public filings showed holdings suddenly jumping past 2.65 million ETH. This was back in late summer. And that really changed how the market started looking at them.
Right, and they weren't shy about it either. They actually came out and said they want to acquire 5% of all Ethereum.
Exactly. That specific goal, 5% of the total supply, well, it just poured fuel on the fire.
Yeah.
It basically transformed the investment story. It's less about tech now and more like they're this actively managed kind of levered crypto fund.
Almost hiding inside a tech company's shell.
You could see it that way, yeah. And that scale, holding over, $11.6 billion in combined cash and crypto assets, that made them the world's biggest corporate ETH holder. And that got the institutions interested. You saw inflows picking up, momentum building through September into early October. The whole narrative became about betting on Ethereum's long-term success, and BMNR was seen as the way to play it. The stock price started tracking ETH, not really their own operations.
So the market basically decided, okay, your value is now tied to Ether. Forget the profit and loss from your actual business for a minute.
That's pretty much the story that took hold, yes. But, and it's a big but, does that story hold water when you actually look under the hood at the fundamentals?
Okay, let's pivot there then. Section 2, the red flags, the operational reality check.
Right. So if we try, just for a moment, to ignore the $11 billion crypto pile, which is hard. I know, what does the core business look like? The immersion cooling, the hosting side. And this is where you see some, pretty significant structural issues.
The numbers must look pretty stark compared to that huge market cap. You mentioned they aren't actually profitable on a gap basis yet.
That's correct. Not sustainably profitable. If you look at their trailing 12 months, the TTM revenue, it's only $5.45 million.
Wow. Only $5.5 million.
And on the bottom line, TTM net income is actually negative $6.53 million.
Yeah.
So yeah, they're operating at a loss. Margins are negative, mostly because they're spending heavily to scale up, build out that hosting capacity. It costs money.
Okay, so $10.12 billion market cap versus $5.45 million in revenue. That disconnect is, it's vast. The price to sales multiple is astronomical. It's pricing in, like you said, almost infinite growth or something completely different.
And if you try to apply traditional valuation, like a discounted cash flow model, DCF, this is where it gets really wild. Analysts point out the stock is trading maybe 10,000% or more above its estimated intrinsic value based on those cash flows. 10,000%.
So fundamental valuation is just out the window right now.
Pretty much irrelevant to the current price, yes. The market is purely exclusively pricing in the potential future growth of that Ethereum treasury. It's a bet on ETH.
But they do have this immersion cooling tech. That's their thing, right? Doesn't that give them some kind of edge, a moat?
It definitely gives them a technological advantage, that's fair. Immersion cooling is more efficient, especially for the newer power-hungry mining chips. It lets them run hotter, denser setups more efficiently than traditional air cooling. So yes, lower operating costs, potentially better hash rates. That's a real benefit. But is it a dominant, defensible moat? Probably not. The whole sector is moving towards more efficient cooling. They're well-positioned, sure, but they don't own the concept. Larger players are also adopting similar tech. So their core business edge is about efficiency in a competitive market, not some unique protected technology. The valuation isn't built on those cooling tanks. It's built on the crypto.
Which brings us right back to the tension. Huge treasury value, but an underlying business that's losing money. So the new future looks volatile.
Extremely volatile. And that brings us to the upcoming catalysts and events, especially over the next, say, 3 months. There are specific dates we need to watch.
Okay. What's first on the calendar?
The big one, very soon, is the Q3 earnings release. That's set for October 29th. Now, obviously, everyone will look at the updated treasury numbers, how much ETH do they hold now, but smart investors will be digging into those operating losses. Is that $6.5 million deficit getting smaller, bigger, staying the same? If there's no improvement on the operational side, even if ETH prices are up, the stock could still take a hit.
Makes sense. What else after earnings?
Then you get into institutional positioning. November 11th, you've got a major ETF rebalancing window.
Rare.
If BMNR is in major tech or crypto-related ETFs, their weighting could change, forcing buying or selling.
Ah, okay. Index fund mechanics.
Exactly. And then December 16th is the deadline for institutional 13F filings.
That's when the big funds have to disclose their holdings.
Right. So we'll see if the BlackRocks, the Vanguards, Fidelities of the world are increasing their stakes, holding steady, or maybe getting out. Big changes revealed in those filings could absolutely trigger significant price swings, liquidity shocks, basically. It could re-rate the stock overnight based on what big money is doing.
And alongside these scheduled events, there's always the rumor mill, right? Speculation driving things day to day.
Oh, absolutely. And with DMNR, the rumors are pretty potent. There's constant chatter about a potential Ethereum ETF partnership.
How would that work?
Well, the idea is, given their massive ETH stash, they could potentially lend those assets out to or partner with the firms launching these upcoming U.S. Ethereum ETFs. That could create a whole new revenue stream, earning yield on those billions in crypto. That would be a pretty big deal.
I see. What other rumors are floating around?
There's also talk of strategic mergers. Whispers that maybe a traditional finance player desperate for easy, large-scale crypto exposure might just buy BMNR outright for its treasury.
Just acquire the ETH holdings, essentially.
Pretty much. That implies a big potential takeover premium, of course. But it's just chatter for now.
And on the flip side, any negative rumors?
Yes. The persistent one is about potential regulatory scrutiny. The SEC. There's always this background noise about whether the SEC might investigate BMNR's treasury practices, how they value those assets, the disclosures. If that rumor ever turns into a formal investigation, well, that could trigger massive regulation-driven fear and volatility. It could wipe out that speculative premium very, very quickly.
So, huge potential upside from partnerships or M&A, but also significant regulatory risk hanging over it.
Exactly. The potential reward is directly mirrored by the potential risk.
Okay, let's try and ground this in the chart. What does the technical picture look like right now? Despite the volatility, the trend has been up.
Undeniably. The performance is, well, stellar on paper, up over 33% in just the past month. And that's on top of the 709% year-to-date gain we mentioned.
Where are the key levels traders might be watching?
So the price has been bouncing around, let's say, $56.50 up to near $63 recently. Importantly, there seems to be pretty solid support building around the $48 to $50 level. And that lines up nicely with the 50-day moving average, the 50-day SMA.
Okay, so the trend structure is still technically intact. Buying the dips has been working.
Technically, yes. The market seems willing to step in on pullbacks toward that $50 area.
What about momentum? Any signs of it slowing?
If you look at the 14-day RSI, the Relative Strength Index, it's currently around 36.4.
Oh.
Now, that's not deeply oversold, but it is on the lower end of its recent range. So for momentum traders, that might technically support a buy-the-dip idea, assuming the uptrend continues.
But we always come back to the but.
Always. We have the strong technical picture, but we absolutely cannot ignore the risks we've been talking about. That fundamental detachment is glaring.
How does that risk show up in the metrics, like beta?
Well, the beta is high, around 1.43. That tells you the stock is expected to be significantly more volatile than the overall market, about 43% more volatile roughly. And the measured volatility itself is also high, over 10%. So yes, expect big swings driven by crypto news and sentiment, not really by their own business performance.
Okay, so high market sensitivity. What about the specific risks tied just to BMNR itself?
I'd highlight 3 main ones. First, those ongoing material operating losses we discussed. That has to turn around eventually, right? Second, there's equity dilution risk. They've raised capital recently, likely to fund growth and maybe even cover some costs. Issuing more stock can pressure the share price. And third, the big one, extreme dependency on crypto prices, particularly Ethereum. If ETH takes a major dive, the core rationale for BMNR's current valuation just evaporates. instantly.
Right. So let's synthesize this. We've laid out a ton of risks. Valuation disconnected by 10,000% from DCF, actual operating losses, regulatory worries, high volatility dilution. And yet our overall assessment gives it a bullish rating, an 8 out of 10. That sounds really aggressive. Are we just endorsing chasing momentum here?
That's a fair question. It is an aggressive rating, and it absolutely needs context. That 810 reflects the potential for significant alpha outsized returns, but that potential is driven almost parallelly by the massive size of that Ethereum treasury and these upcoming Q4 catalysts we talked about, earnings, ETF news, institutional flows. It is not an 810 for a traditional value investor. Absolutely not. This kind of thesis really only fits two profiles. Maybe a short-term trader playing those specific catalysts, fully aware of the high risk, or a very speculative long-term investor who understands they're paying an extreme premium as the cost of admission for what is essentially a levered bet on Ethereum's future. You have to go in eyes wide open. This is pure speculation at this point. Treat it that way.
Okay, that clarifies it. BMNR is sort of caught between two worlds. Its price reflects the tangible value of its ETH holdings, but its long-term survival still depends on its core tech business eventually becoming profitable, which hasn't happened yet.
Exactly. And that leads to maybe final thought for you to consider. Even though BMNR started as a crypto infrastructure company, Immersion cooling, mining tech, its path forward, certainly in the near term, might have less to do with that. Its price is likely going to be driven more by how well the market accepts it and how well they manage it as a financial instrument, basically a levered proxy for Ethereum itself. If they can successfully monetize that huge treasury through lending, partnerships, whatever, the market might just continue to ignore the losses in the core business for quite a while longer.
Fascinating. A high-stakes financial play wrapped in a tech company's skin. Definitely one to watch closely. Thanks for breaking that down for us. Hopefully this gives you, our listeners, a much clearer view of Bitmine Immersion technologies and the significant risks and potential rewards involved. We appreciate you tuning in. We'll catch you on the next discussion.